Hi everyone, today we're talking about all the speculation that we're seeing in the marketplace, and you're going to want to stay tuned because we're going to talk about a potential soft landing place to invest your money. Welcome to YCG, where we help your capital grow so that you can achieve your financial goals. If that's something that interests you, then hit that subscribe button and the bell notification so you don't miss a thing. I'm Will Kruger, CEO here at YCG, and today I'm joined by Brian Yacktman, President and Chief Investment Officer here at YCG. Brian, it's good to see you.
It's good to see you, Will.
All right, well, welcome to our segment, Mind on Markets. And today we're talking about the speculation that we're seeing in the marketplace. I call them spec SPACs, which is a perfect example, right? These speculative SPACs, these speculative IPOs that we're seeing in the marketplace. Seems like as we talk here at the office that it seems to be a time right now where we need to invest with care. And wanted to start with kind of from that mindset. What are your thoughts and what are you seeing in the marketplace right now, Brian?
Yeah, I mean, you're certainly right. This is definitely an environment that's ripe for speculation. I think part of it just started with this whole Robinhood effect, where there's an actual structural increase in the number of investors. It's amazing to me when you look at, Charles Schwab is 6 times the size of Robinhood, but Robinhood is experiencing twice the amount of trading activity. So it's phenomenal just how much these retail investors, I think part of it is in this COVID environment, people being at home, there's no place to gamble. And so, sports are pretty much have been dead. And this is what they turn to as their backstop. It also increased the number of users just because there's fractional share ownership now too. So almost anybody can get access to any share price with almost any amount of dollar.
Well, and you say that, but I don't think that's a negative. I actually think that's a really positive thing because I think more and more young people are learning about stocks, are learning about investing. And I think that's a very, very positive thing. I think to your point, though, it's important to be an informed investor. And I think that's what we're all about on this channel is informing and educating people about how to invest and how to grow your wealth in the long run and not speculate.
Yeah, I totally agree. I mean, I think it's great. I've got my nephew who's super into investing, and I think it's a great thing, something that we want to have.
For sure.
But I think that it does point out, look, we are in a very speculative environment. And coronavirus has also led to, like you bring up the SPACs, these blank checks that people are writing. And it's because they're very fast. It's a vehicle that's a fast way to fund a new deal. And so coronavirus has led to, I think, this increase in structural users, right, of Robinhood, the SPACs we're talking about. And now there's been this underlying don't fight the Fed narrative that has lifted all stocks. Well, that's now led to an environment of, ripe for great time to set up IPOs. You look at the Snowflake IPO, and my goodness, it was trading at over 100 times sales. This is sales, mind you, not earnings. Over 100 times next 12 months sales. So I just think it's a time to be careful to recognize what kind of environment you're buying into.
Yeah, it seems to have a similar rhyme to the early 2000s, right, in the dot-com bubble where there were these massive valuations, very little cash flow generation, and it seems to have similar parallels for that time period, at least in this market segment.
Yeah, and as you bring that up, it just reminds me. What came in my head was that Luckin Coffee.
Yeah,
I don't know if you saw that. Just months ago, they uncovered a fraud, and after uncovering a fraud, the stock still went up. So, I mean, it blows your mind.
It really does.
So for us, I mean, we're just more like, look, this is an environment. It's so important that you're focused on investing in really resilient businesses that can make it through this environment. Businesses with dominant franchises, with proven business models that are conservatively capitalized and will survive on the other side.
So let's switch here and let's talk to the folks listening in here. Where's a place to invest our money? Where's a potential soft landing place where, despite the uncertainty, despite the volatility, high valuations, where can we invest our money? And maybe let's get specific about a particular company that you've been looking at and think that has long-term pricing power.
Yeah, sure. So Estee Lauder, here's a business that, of course, it is affected by COVID. Everything has been really, and positively or negatively. But in the case of Estee Lauder, it has been affected, and so sales have been down. But I would point out that it is a very dominant business that has a short repurchase cycle, meaning it's a disposable good. And so people will come back, especially in this selfie generation. The demand will be there, and we're confident, we believe strongly that the demand will return. They did so after the 2001-02 recession. They did so again in the 07-08-09 period. So to us, we believe this is going to be another one of those, history will repeat itself, where the demand will bounce back. And more importantly is then, while you're waiting for that to happen, can they survive? And Estee Lauder is very conservatively capitalized. In fact, the net debt, by the time you take debt minus cash and you divide it by their cash flow, it appears that they could probably pay off their debt in a year or less. So it's something
Wow.
where we definitely see it. We believe it'll make it through to the other side, and demand will bounce back.
We talk about investing in global champions here at YCG. It sounds like some of those aspects that you just brought up make it a global champion. But is there anything else that you would cite that what makes Estee Lauder a global champion?
So, well, first of all, they dominate 15% of the prestige luxury market. That's the angle they've taken, is to focus on the more luxury side of things. And they are the number one or number two player in 40 different countries around the world. Now, you might say, well, they're dominating now, but how do you know they'll continue to dominate in the future? You know, management touts, they take in over 200,000 data points a day. When people are just surfing and browsing on the internet, they have all these analytics that basically, they have a finger on what the consumer wants. And they have the ability, their operations are so smooth, they bring products to market faster than anybody else. So not only do they know what the customer wants, they can bring it to market faster. Most companies take, over a year, maybe 18 months or 2 years, and they're doing it in a year or less. So They dominate now, and we believe they'll continue to dominate.
So when we talk about these global brands that are so appealing, and especially in the case of Estee Lauder, what about the risk of their brands losing notoriety globally to either competition? How is a business like Estee Lauder able to maintain its pricing power with that kind of uncertainty, if there's risk of brands losing their appeal or strength?
Yeah, and that probably right there is the number one question every investor should be asking themselves about any investment. Is there enduring pricing power? Because competition and innovation steps in, it drives down prices. And so businesses over time have a hard time maintaining high returns on their capital. Well, in the case of Estee Lauder, there's a difference. A lot of brands, as you point out, they're being used as an information filter. And in this new environment as time goes by, information is becoming more plentiful. You can do searches and reviews, and those might make you more likely to switch brands or to try out different products. And while there's an element of that could be true in the prestige beauty market, the reality is that whenever there is a social status or an element of your own beauty involved here, we believe that helps add to the pricing power of those brands. And as evidence of that, a lot of consumer staple type or household products, you'll have private label penetration, these generic brands, of double digits, 10, 15 or more percent. In the case of prestige beauty, it's only 2 to 4% of the private label market. So clearly the consumer has been telling and communicating brands are important to us. And we believe that's because of that social status element that gives it more pricing power. And in the case of Estee Lauder, they have basically created one of the largest beauty belief networks ever. There's Estee Lauder, MAC, Aveda, La Mer, Bobbi Brown, Too Faced, Tom Ford Beauty, Clinique. So a lot of brands, and they continue, as I say, to bring new things to market or to acquire if they need to. But they continue to dominate. And that pricing power, that ability to charge a premium, even in the face of competition, they've proven to have it, and we believe they'll continue in the future for those reasons.
That makes a lot of sense. I think when you're talking about cosmetics, these are products that are socially consumed. Individuals will pull out their cosmetics in public, and people also want quality as well. So it's not just the brand, but it's the quality of the product as well, and it's socially consumed. Very different from laundry detergent. Obviously, people want quality with their laundry detergent, but no one really knows what laundry detergent you're using at home, and so I think there's that nuanced difference there between those two products. Well,
exactly.
Let's kind of switch then. What are you seeing from a growth perspective? Volume growth with Estee Lauder. Does it have a long runway for growth? I guess is my basic question.
Yeah, so the first thing that I'd point out is personal care as a percentage of GDP has been taking share slightly. It's actually grown as a percentage of GDP over the last decades. And that makes sense because as consumers have more discretionary wealth, they're putting it towards things such as becoming more, to tackle the desire of attractiveness and to become more beautiful. So I think it's important to first point out you want to invest in industries that are growing at least as fast as GDP. And in this case, they've actually taken share and increased their share of the pie of GDP over time. I would also point out that in the emerging markets, they're only right now approximately 20% of Estee Lauder's sales. So there's a long runway of growth that could become a bigger portion of Estee Lauder as the world continues to innovate and grow its wealth over time. To put this, into perspective, in the U.S., per capita spending on luxury goods is about $250 per person. In China, it's about $23 per person. And in India, it's only about $2 per person. So as the world becomes more wealthy, you're going to find there's this massive runway of growth potential for people to invest in, for Estee Lauder to continue to reinvest in these other countries and grow so that India is not spending $2 per person, but they get up to 250 like the US, and the same China, 23 up to over 250. So you can see a really long runway of growth for, in our eyes, this could be decades to come.
That's awesome. I think it speaks to being a patient investor and letting that thesis play out, letting that growth come with consistency and with time as well. Let's talk about kind of the changing landscape that we've been seeing, right? So there's been definitely decreases in mall traffic. How does this affect Estee Lauder? And what are you seeing with regards to growth as far as the landscape goes?
Yeah, so Estee Lauder, it's interesting. If you go back, they used to have, this is like, I think about a decade ago, it was about 54% of their sales were in malls. And then as that decade went on, they diversified into another channel, which was the airports. The airports basically became the new mall. Mall sales went from 54 to 39%. And the percentage of sales coming from airports grew to about 23% of sales. And so they're not being hit just by the malls, but the airports too. You can look up TSA traffic and it shows you that airport volumes are down still 60 to 70%. Well, the point I would make is just like they adapted moving from malls to airports, they're now adapting their online sale presence is becoming stronger and stronger day by day. It's about 15% of their sales, and management is spending 75% of their ad budget on digital marketing. And so I think what you're going to find is their products, because they're desirable and they're in demand, they're less of a push product. They're more of a pull product, meaning consumers want to go find that good. And so they're just going to go find the channel they can get it through. And as I said, in the selfie generation, in some ways, you could actually argue the more we do these things by Zoom and by FaceTime or whatever you call it, the more that people want to use their makeup products. So I think you're going to find that the demand will be relatively stable over long periods of time. And we believe they'll come out and emerge stronger on the other side.
Well, this has been a fantastic discussion. We've talked about the speculation that we're seeing in the market and the dominance of Estee Lauder from a pricing power standpoint and volume growth standpoint. It's truly a global champion in our opinion. Brian, thank you so much for your time today. Those of you watching, leave your comments, questions below. Check out our other videos, and we'll see you in the next one.